So what's up, big dog?
What's going on, man? It's good to be on, man. I'm glad you had me on here, man.
Appreciate you. So welcome everybody to another episode of Finally Financial, where we teach as well as learn. My next guest is a friend of mine. He is a great guy, and I'll let him introduce himself. Can you just tell the audience a little bit about yourself, brother?
Yeah, man. Erik Chinea, founder of EightOne Capital. Got going into this, man. This actually started January 25th is when I first got going, got approved from the state of Texas. Prior, Texas high school football coach for the last 16 years. I mean, we coached together at Sterling, man.
Mm-hmm.
So, it dates back to, man, we're talking about 9 years now, give or take, almost 10 years now.
Yeah, already.
11 years. Yeah, something like that. So,
yep.
Yeah, man, been, originally from South Florida.
Okay.
Moved to Texas, man. Love it out here. Excited to be here.
Good. That's what we like, man. I knew you'd be a great one to be on here, man. Finance guy. I didn't really know you were a finance guy or, until you started your company actually. So that's awesome, man. So let's start by going back a little bit. So you were, I guess, a former Texas high school football coach, a head coach at that. So how was that experience?
Man, I take nothing away from the last 16 years being a Texas high school football coach. Just between the relationships, the people that the meet that you get to coach with, the guys, the camaraderie, the kids and the experience with that and molding kids' lives, man. While we'll never know it right away,
yep.
It's nice when 4 or 5 years come down the line, those kids come back like, man, coach, I appreciate everything you did for me, and seeing them and celebrating their successes. Just finished up my last year coaching, and I stayed because I had a kid that was a freshman quarterback at Pearland.
Yeah,
who's going on the University of Houston now, and I told him I would stay through his senior year, so I gave him one more year, and yeah, man, decided it's time to jump ship, and it's been great, but ready to be a dad and ready to be home and be a father and a fan of the game again.
So you had thought about it previously, but you just wanted to give it time for him to graduate.
Yeah, I mean, so probably it's going probably 2-3 years now in the making, man. I'll tell you what really got me back into investing was when the whole GameStop craze happened.
Yep.
I started investing at like 12. My dad put us into, putting money away and investing and everything like that. And about 2-3 years ago, man, when all that game stuff, the craze went on and everything, I jumped back in and started making a little money in the markets again. And, started helping my dad with his portfolio. And it just from there, just steamrolled. My dad was like, hey, mom and I are retiring soon. So if we're going to pay anybody, we want to pay you.
Absolutely.
And, it's been great.
Yeah. Good. So your dad and mom, so they instilled in you good financial habits and things like that? Oh,
for sure. I mean, like I said, my dad was one. He had a saying, man, you have to create your own lotto. You hear people all the time like, oh, man, I just wish I would hit the lotto. And I'm guilty of it. I said, I wish I would hit the lotto. But the problem is I never play it. You know what I mean? So it's like you want to hit the lotto, but you never play the lotto. So, my dad got us going early. I remember being about 12 and he had some mutual funds for myself, my two brothers. And he said, man, I'm paying more in fees at this point. He says, I'm just going to take it out of that. And so he got me into trading penny stocks, man. And from there, just, doubled my money in like a month. I was like, man, I like this. So he's always instilled that in us to put money away, man. It's been good.
Yeah. Good deal, man. Love that. Okay. So now I guess at some point you decide you want to hang up your whistle. So what went into that decision?
Oh man, a ton. Being like I said, 16 years, all my kids know is dad is a coach. Son grew up in the field house. You remember on the field house watching film. He put film in for us. I mean, so it was tough on that aspect. Man, I tell you, I felt almost guilty as though I've been doing this whole time, and it was just almost an expectation that hey, my son's gonna get to high school and I'm gonna get to coach him and everything. And I just knew that I wasn't in love with what I was doing anymore. And I said, man, if I'm going to make the switch, I need to do it now. He's going to 7th grade, be able to watch him play and everything. So it wasn't easy, man. And, without the support of, my family, especially my wife, she's a coach's wife through and through. And, she supported me on the business, venture. She said, if this is what you want to do, you're good at it. You enjoy to do it. It brings you pleasure. Yeah. So go for it.
Go for it. Hey, whenever a wife says go for it, I think of Rocky. I know it was Rocky 3 where he was bullshitting in training and he couldn't do anything right because she didn't want him to fight anymore.
Didn't want him to fight anymore. Yep.
He had the baby and she woke up out of the coma and she was like, just win. You know what I'm saying? Just win. Like
words of Al Davis, just win, baby.
Just win. Absolutely.
Just win. Yeah.
So then So I guess the other decision you have to make, because I know, do you still teach? Am I right about that?
I do. I am still teaching. I figured I'd give myself another at least a year of teaching just to continue to grow the business and to continue to learn in the process also, man. I'm not coming from a financial background. I don't have a Harvard degree. I don't have a Wall Street pedigree. You know what I mean? A lot of stuff has been self-taught and,
Yeah.
so give myself still a chance to learn, you know what I mean? The ins, the outs, especially talking about dealing with wealth management, man. So,
Yeah.
I'm going to give myself another year of teaching, but, I enjoy teaching. I love educating. I love coaching.
Yeah.
And like I was telling you yesterday when we spoke, man, my wife was one of the ones that said, hey, you're still coaching. It's different, but you're still coaching. Coach people on the finances now. So,
exactly.
You'll always be coach. Something they can't take away from you.
Coach Chinea. Absolutely.
That's it.
Absolutely.
So, for sure.
So at Pearland, do you teach a finance class or some aspects of finance in your class?
So I've taught everything from money matters, personal financial literacy
Awesome.
at Pearland. I teach, sports entertainment marketing, entrepreneurship.
Yep.
Matter of fact, this year, as I was starting up my business, I took my entrepreneurship class and we went through that whole process and, had them help me out and worked on website design, logo design, starting an LLC, everything that goes into it. Because you figure, hey, give them, real world experience. It's real easy to just talk to them out of a textbook. Right. At least now they're getting to live and getting to see, that, it is possible, just got to do it.
Yeah, it's the best way most students learn is through actually doing it and real world experience. That's
good. Yeah. As well as I do as a coach. Yeah. I can show you on film all day. I can show you drill tape. I can show you practice film and everything, but you the only way you're gonna get better is by being out there and doing it and the reps and the drills and doing it.
Absolutely.
So, yep.
So then I guess the decision is, do I want to work for someone else or do I want to start my own company? So what led to that decision?
So I had a former coaching colleague, Mike Farrell, who was with Edward Jones, is with Edward Jones.
Okay.
And I reached out to him and started talking, and there was an opportunity there to go and start with Edward Jones. And I said, well, if I'm going to go and work for somebody else and I'm going to work for another firm, now I have to, get clients and bring them over there. And I figure I'd do it, a year or two so I can learn the business and then open up my own. Now I have to fight Edward Jones, to bring all those customers with me to my own. I said, you know what, man, you learn by doing. So guess what? We're just going to open up our own and we're going to get after it. You know what I mean? And we'll start small and, and it's growing.
So you jumped in feet first.
I did, it's like I said, man, throw people to the wolves, man. And, you want to learn a language, go submerge yourself. And you want to learn German, go live in Germany for 6 months and fully submerge yourself. Right.
Yep.
So, it's going to be one of those that, you got to do it. And it's going to be bumps in the road. It's not all, sugar plums and rainbows and everything. But, again, you learn by doing.
Yeah. So you find out a lot about yourself by doing it that way,
For sure.
Yep. So I guess I can see the logo, but to tell everybody what's the name of your company and what you guys offer.
Yeah, so we're EightOne Capital. Like I said, started a limited liability company, an LLC, man. Do a lot of financial planning for folks that are, either going into retirement, people that are looking to build for retirement, people that might be currently retired. So, we do a lot of investment management, comprehensive financial planning, ongoing financial planning. We do debt analysis. We look at, mortgages and net worth, and we take snapshots and, and make sure that people are on track with where they're trying to go and, help people set up budgets if they need help setting up budget. Everybody's different, which is great about this. Everything that you read about in the books when you study about, putting together a plan and dealing with the client and going through your work processes A to Z. Well, there's sometimes where you pick up a client and you're already at E and you hadn't even been able to do A through D. So, but anyway, being able to help people and show people that there is a way. There are far too many people out there doing it wrong. And again, I go back to my parents who didn't come from anything, no inheritance, rough upbringing, didn't make a ton of money when we were growing up, and watching them be able to do it, that proves to me that there is a way. The average American, you just work, you invest, you put your money away, there's a way to retire and live that ideal future state that everybody's looking for.
Yeah.
And that's what we're trying to do, help people find that ideal future state.
Yeah, exactly. Good, man. If I was gonna do it, I would do it your way. So I started this channel, this podcast for students, and so I can educate students on the benefits of finance, basically stock market, real estate, entrepreneurship, things that that they probably see on a everyday basis, as opposed to like financial planning and stuff, So, I get where you're coming from. And, so, you're going from teaching one thing to teaching another, man. But
Yeah, it's been good, man. And that's where my passion truly lies, is the investment management side, man. Reading charts and stock market, looking at financials and trying to find, try to find value stocks for people, looking at growth stocks, and really to manage people's portfolio, because the end goal is to ultimately open up a hedge fund. And that's where, the fun starts. Yeah. So, being able to teach kids, I do the stock market game, or how the stock market works with my students in class. And every year we have a competition where, I tell them, anybody beats me, everybody starts off with 100 grand in fake money, paper trade. And anybody beats me at the end of the semester, I'll buy you lunch. So, it keeps the kids engaged, and they start seeing like, man, you really can't make money in the market. I'm like, guys, I'm telling you, there's a way to do it. You want to retire, you're not going to retire by just putting your money into a savings account. That's not going to happen.
That's exactly what I tell them. And you're right, man. If you can make money with the fake money and doing it that way, you can make money with real money. And it builds their confidence. They learn along the way, and we had some students doing that as well, man. And I really enjoyed that aspect, that some students would dive in, man. They were very interested, and other students would slow play it, but
people fear the unknown. They fear the unknown, and people, when it comes down, you talk about money, right? People work hard for the money.
Yeah, man.
It's like, man, there's a risk. There's like, I can make a lot of money, but man, there's risk. Well, what if I lose it all? And it's our job as financial professionals to show them, like, look, this is, there's a way to do it, and there's a way to go out, mitigating some of your risk, because ultimately we want to get to a point where we don't ever have to work again.
Yeah.
If I just want to kick my feet up every day and sit on my couch and never have to go to work, I want to be able to do that.
I want to be able to do what I want to do.
Right, exactly. And if you don't know, that's where we come in as financial professionals. People are like, well, why am I paying somebody money and they're going to help me make money? It seems counterintuitive, but I look at it like this. If you were sick, you would go and pay a doctor, right? Why? Because they're professional at what they do.
Yeah.
You want to sell your house, you're going to get a real estate agent. If you're not a mechanic and you don't know, then go on. Now you can learn all the stuff you need to and become a mechanic and become a doctor and all that and do it yourself. But there's a reason why, I don't go to my plumber to get a haircut, or do I go to a barber?
Absolutely.
So that's what we're here. You seek out the professional help. And I tell clients all the time that I may not be the right fit for you. And I want you, after our first meeting, to please meet with other financial advisors and financial planners to see that, make sure that you're finding the right fit for you, the right fit for, for them. So it's good. But I tell people, if you don't know, go and find out. And if I don't know the answer, I'll find out for you, man. But knowledge is power. I mean, everybody knows knowledge is power.
Absolutely. Absolutely. So you guys help people with the stock market?
We do. So we do more, the investment management. So people that, there have some people that want me, to have given up what we call discretionary access, which means I can trade their account without getting, an approval from them all the time. And you also have non-discretionary. So there are times where we can go through and people are like, hey, I have a brokerage account where I just want to be able to buy individual securities. I'll be honest, it is tough to beat the market doing it that way. Mm-hmm. If I ask anybody right now, unless you had money where you can just say, hey, you know what, I got 100 grand set aside and I just want to go and buy, 100 grand worth of whatever, individual securities. Yep. That's great. But, ETFs, right? Low cost, things that you're not putting all your eggs in one basket. Mm-hmm. So we help people with that. And anybody that's, looking to roll over, 401k from a previous job and roll into an individual retirement account, 403Bs with a lot of teachers, 457s with, government employees, helping people set up college plans, for their kids so they can, college savings plans. And really, just find a way to, not find a way, we go through and we sit down, we do, a risk assessment and we look at their objectives and based on how all that stuff comes back, we talk it through and, determine where they want to be really aggressive, where they want to have a lot of their money in equity and very little in fixed income, and depending on, that as opposed to somebody's more conservative that says, hey, I only want about 20% in equity or about 50% in fixed income, like your bonds and stuff. I want to hold on to 30% cash, which is what I advise right now, man, until this thing settles down. Like if anybody's doing this, man.
Okay. So repeat that. What do you advise?
So what I mean, and this is just, again, me, let me just leave this disclaimer. This is not financial advice, you know what I mean? But with my clients, what I'm, trying to explain to them now is that there's a lot of volatility in the market. We don't know what's going to happen tomorrow. Today there's, could be a rally. Tomorrow it could dump another 800 points. So if you're trying to preserve some capital right now until this thing settles down and it, and it bottoms out, that yes, still stay with your investing style, but understand to rebalance your portfolio and try to keep a certain amount in cash so that when it does bottom out, now that presents buying opportunities. Absolutely. Right? So like Warren Buffett, that says when people are greedy, that's when they need to be leery. And when people are being like, oh, the leery, that's when you need to be greedy, right? So now people are going to get leery when it bottoms out. Now you have cash set aside and you go in, you buy everything cheap and you wait for the next run up.
So this is a question then, because yeah, you're right. Right now we don't know where the bottom is or when the bottom will hit. So that's a question to ask you as a professional. When will you know it's hit bottom?
Man, if I could predict when the bottom was going to hit, man, we wouldn't be on this meeting right now, man. I'd be on a private jet somewhere, but you'll start knowing, man. I mean, realistically, you think about it right now, man, with inflation being high and, Fed talking about raising the rates, and which means, they're going to raise the rate, charge banks more, interest rates go up. So the housing market slows down. It's cyclical, right? So, it's going to go up and it's going to go down. And realistically, you need times like this for, to create buying opportunities for people that can be able to afford to, invest in a Tesla or in a Amazon, which actually just split 20-for-1 not too long ago.
Because I'm gonna just be honest, the way my account looks like it's the bottom. Looks like it's past the bottom.
I can't see any more red, man. I'm with you.
I don't know if it could go any lower.
I'm with you. Yeah, no, I get it. And there's things where it's finding, levels of support and stuff like that. When will like I said, GDP, the dollar's getting stronger, and when the dollar's getting stronger, the economy's going to do a little weaker. And we need stuff like this, man. Unfortunately, as bad as it is, and people are losing net worth, constantly on a daily basis, but we need it. So when will it happen? I don't know. This thing goes up, down, sideways, right? To woozy, to wazy, we don't know. So it's just a matter of studying charts and staying on top of some of the economic indicators that a lot of people don't know to follow. Right. And why those things have an effect on the market.
Absolutely, man. You definitely spitting some good knowledge, man. Let me get this break in there. If you found value in this podcast, please subscribe or download so that you can get more videos, more podcasts just like this one. If you're watching on YouTube, please like, comment, and share with friends and family so they can enjoy what Finally Financial is bringing to the table. Appreciate you, brother. Now let's talk about a few things you offer, man. Retirement planning. So if I'm 5 years, 3 years from retirement, and I say, okay, I've been doing such and such for so long, like, what can you help me with?
So talking about, trying to get somebody that's, 3-5 years, out from retirement, really starting to look at, what your portfolio looks like. Right, what do we sit on net worth? How much in cash? What is it going to cost? The biggest deal is to find out how much you're going to need every month when you retire, and then playing that out over however many years you continue to plan on living. Right. So if you just went with a rule of 90, being able to say, all right, well, I'm 65, we'll just say now, and I'm retired, or I'm 62, I want to retire at 65. Where do we go from here? And making sure that, unfortunately, one of the grim areas you have to talk about, making sure, do you have a will in place? Is your estate plan in place? Do we need to, if you've been aggressive investing style, do we need to scale back now and become more capital preservation to make sure that you always have that cash on hand, so that, when it's time to take those withdrawals, that you can start taking those and you have enough, measured out over, however many years that you're going to need it before you start touching other accounts. So, you probably want to have a surplus in your savings account. You might have taxable accounts, you might have, non-taxable accounts, qualified accounts, non-qualified, and which ones do you pull from first, right? Do I pull from here? Do I need to do any conversions, from my traditional IRA over to a Roth? This way you can, kind of limit some of your taxes. And again, so that's with the estate planning. I just went to the library today, man, took my nephew and I bought a book that was, I checked out a book called Estate Planning 101, so people can start one that I can, and just so, I can be able to pass on to my clients and educate people, probate, death taxes, avoiding probate, setting up a trust, things like that, so that people know, hey, I need to, yes, my money, I want my money to outlive me, but where's that money going to go once I'm no longer here? Right. And making sure that, I either have something in my will, my estate plan, a trust set up for kids, grandkids, whoever you plan on leaving money to. So things like that, and getting a full snapshot, how much debt do you owe, going into this? Is your house paid off? Do we need to pay it off? Do you have any vacation homes, right? That you're looking to get rid of, you sell it. And then, so, there's a lot of factors that go into it, but realistically it's looking at how much do you need to bring home monthly the day you retire for the rest to live the life that you want to live at retirement, right? I don't want to retire and be having to live off beanie weenies and eating ramen.
Right.
I want to be able to pick up and say, hey, we're going to steakhouse, or hey, we're flying to New
That's the
York for the
goal.
weekend, watch a
Absolutely.
show and go eat somewhere. Yeah.
Yes, absolutely.
So, what does your ideal future state look like? And it's different for everybody.
Right.
And one of the biggest things we start with is making sure that we understand what it is that our clients are trying to accomplish.
Right.
Because your goal is going to be different from somebody else's. Where there be some similarities, for sure. But what somebody else, somebody like my father, his dream has always been to purchase an RV and travel the country and see all the sites and everything.
In retirement.
To be able to do that now. Right. Yeah. Retirement. That's the things that they want to do. So, our catchphrase, our slogan, whatever it is discover your journey. And that's what we're here to help people do. We're trying to, help people discover their journey, and whatever your journey is specific to you.
Yep.
And, let's keep that in mind as we go through the planning, phase and see where that leads us.
And I take it for someone that's maybe 55, 58 and nearing retirement, those conversations are different than someone that's maybe 40 and 45 and still has 20, 15 years
for sure
to work.
For sure. They talk about the rule of 100, and they say, if you take 100 and subtract your age from it, that's how much you should be invested in. And again, it's a general rule. That's how much you should be invested in equity, and the rest of it should be, fixed income, right? And having some in cash. So somebody, that's 40 years old, that's preparing, within the next, they want 15, 20 years to retire, is going to be very different investing style compared to somebody that is retiring in the next 3 to 5 years.
Right.
So somebody that still has time can take a little more risk. If you're 22, just out of college, got a good job, well, you can afford a little more risk now, right? You can take a little more risk now to be a little more aggressive in your investing style. And then as you get older, right, you become a little bit less aggressive.
Yes,
and hopefully you built that nest egg and that fortune up, right? We're trying to build generational wealth. Right? I want my money to last. I want my great grandkids' college to be paid for, and they have nothing to worry about.
Yeah.
So.
Yes. So, speaking of estate planning and maybe, planning for death. So as middle-class people, it's sad to say, but a lot of us sort of, live check to check or not much past that. So if you're in that situation, how can you think about a will, or how can you, is a will still necessary? And you maybe don't have, all the assets that the next, somebody else may have.
So here's what I'll say. And again, I'm by no means no lawyer, but to me, if you own anything and you have any possessions, let's just say that, you're, we're in mid 40s and we own a house. Yeah, we live paycheck to paycheck. But we also, we own a house, right? We still own our mortgage and everything, but we want to make sure that that mortgage, or that home gets passed on to whoever we want to pass on. So you can, try to avoid it having to go to court and the court's dealing with it. So having that simple document, so that whoever your beneficiaries are, whether you're paycheck to paycheck, if you own anything, you have any assets, my advice is to, at least have a will in place, more especially if you have children. Yeah. If you've got kids, you want to make sure that your kids are taken care of. So yes,
a lot of people think that they don't need a will. They think that their stuff, their assets, their possessions just automatically go to their children. So what do you say about that?
It's going to go down to heirs, yes, but here's the problem is that now you get caught up in a probate, right? So now it's having to go through the court system. Yep. And there are ways to mitigate that stuff. So would they end up getting it? Yes, but now if you're having to go to court, there's going to be court costs. And if you've got to get a probate lawyer and hire them so that they can make sure that everything is done the right way and get things pushed through, again, added cost. Whereas if it's already kind of done and it's set out, it's done ahead of time. So
you're saving them a lot of time, a lot of hassle, and a lot of money in certain instances.
Trying to, we had our will, my wife and I done. She had and a lot of people don't know this also. If your, company you work for, or, the school that you work for, if they offer prepaid legal, it's usually like $3, $4, $5, $7 a month, or comes out of your paycheck. But my wife had prepaid legal, and we ended up getting our will for free.
Wow.
So I had a law firm that did it all for us. They just said, hey, fill out all the paperwork. They gave it to us. So there's ways you can save that way. If you did, $7 at, 24, 26 paychecks, I'm already paying $150, $160, $180. So, $180 for a will, where if you call an attorney, it might be $400 or $500,
Exactly.
But, so just a little tip there, man. If anybody has prepaid legal offered through their job, sign up for it and let them, for the $7 you're paying a month, you got to think about how many times you never use it. One time you do need to use it, there it is. It's there. And, you go ahead and you can get your will done.
Absolutely. So investing in the stock market right now, ETFs probably be the way to go for you. What about gold and silver? What's your any opinion on that?
Looking at gold now, it's been, since year end, it hasn't appreciated much. I don't deal with a lot of commodities.
Okay.
But if you have it might be a fund out there that invests in gold, or you can go out and you can invest in that also. It's never bad as again, what you're looking for is diversification.
Yep.
You need to be able to diversify your portfolio. So having a little bit of real estate, whether it's owned real estate or you're investing in some kind of real estate fund, putting it there, having some stuff that's in commodities, right? It's a little bit of crypto if you're into it.
Well, it's funny that you mentioned real estate, because that was my next question. I was going to ask you. So, do you recommend investing in REITs, real estate investment trusts, or actual properties, and which one would be the benefit? You know what I'm saying? Is that something that you can talk about?
Yeah, for sure. So, here's the deal about investing in real estate on your own and actually trying to own the real estate. That, yeah, you can use it, and there's ways to go about using, how everybody says, oh, we can use other people's money to do this. Right. What you worry about is, are you going to fix it up, flip it, and turn around and sell it? Mm-hmm. Are you going to fix it up or buy it and rent it out? So then you got to think of all of the, I don't want to say headaches, but everything that comes with that, right? So now you're a landlord, right? Something breaks down, you got to be the one that's in charge of that. Now there are other REITs that you can, invest and be a part of. Mm-hmm. I don't mind, telling people that, hey, yeah, get a little bit of your money into real estate. And there are funds out there. There are ETF, the real estate ETFs that you can invest in. Yeah. Right. And let them deal with all the buying and selling and all the research of all the properties. Yeah. You just sit back and, and as it appreciates, yours appreciates.
Exactly. Yeah, absolutely, man. So hold on real quick. So you already mentioned your ultimate goal for EightOne Capital, but could you just talk about that again? What's your ultimate goal, man, for your company?
Yeah, ultimately want to be able to start a hedge fund, and there's rules and stipulations that go with that, as far as registering with the SEC, how many investors you're allowed to have, how to set it up, right? So you need a general partnership, you need to set up a limited partnership. So the ultimate goal is, yes, to be able to do that and, and start the hedge fund. And again, you got to start somewhere. So it might be a $10,000 minimum investment to get in. There are some funds out there, like you look at a Ray Dalio fund, a hedge fund, and if you don't have 250 million plus, he's not even going to look at you. You know what I mean? Yep. So, and a lot of times $250 million plus, a lot of times probably dealing more institutional. Yep. But there's some funds out there that are, hey, it's a minimum of 10 million to get in. And if you're allowed 100 investors, you're dealing with $1 billion, you're dealing with $1 billion fund. All right. So with that $1 billion fund, whether depending on how you do your, your fees and everything, to show you how that money's going, and just understand that there's usually a 1 to 3% management fee for the firm that is going to be managing the account. Okay. All right. And then off of that, then, based on how much is made, we'll just say that it's a 22% that, the fund made this year. Mm-hmm. You might have a preferential rate of, the first 8% goes back to the limited partners. All right. Okay. Which means I don't make anything if I don't make at least, more than 8%. Yeah. All right. So the next 2% after that would come to the general partnership. Yeah. And after that, you go like an 80-20 split, and then you can go a 50-50 split. But just knowing that, where your money is going, how it's going to be invested, understanding your fees. That's something else I tell everybody, man. Make sure that, one thing that people get uncomfortable talking about is the fees. And whether it's a hedge fund or if it's, just dealing with, financial planner, investment management, just understanding what those fees are.
Okay. So, what you just meant, 1 to 3% seems like really low fees. Is it other fees or is that the fee?
Yeah. So, no, that fee goes to, so here, I'll give you an example. I start my hedge fund, and we'll just say it's, ABC hedge fund. Right. Okay. So that is the general partnership. Then you open up what's called a limited partnership, and then you have what's called limited partners that invest their money. Right. Okay. So, we'll just say it's $1 million a piece, right? And I have 10 investors. So I've got a $10 million fund right now. Mm-hmm. So from that 10 million, 2% would go to EightOne Capital, because they'd be the ones managing the fund, right? Doing the trading and things of that sort. Yep. Right. So they get 2% of that 10 million. Yep. And then again, based on what everybody put in, depends on how the split works and how the fees work. Okay. They get it based on the amount they get pro rata. So based on however much they put in. So if everybody put in $1 million and we made back, 22%, we'll just say that, they get 17% on their money and then we get 5%.
Okay.
But the 5% for the hedge fund, that 5% for the hedge fund is 5% on the total value of the fund.
I see.
People are like, oh, you're going 5% on $1 million. That's nothing. I said, no, I'm getting 5% on 10 million plus the other 2%. You with me? And everybody else is getting 17%, but it's 17% on the money that they put in.
Yeah.
Now, while it sounds like, oh man, well, you're making over on people, well, there's also a lot of added expense that goes with that, man. Just in legal fees and making sure your audits and your compliance people. So there's a lot of fees that go with it. But ultimately, it's to be able to help people manage that wealth and be able to, help. I want people to make money. If I want to be a millionaire, I want to help other people and show people there's a way to do it, man. Why not everybody live good? Everybody live good.
And I always say, like I always pay people for, what they went to school for, what they do for a living, rather than do it myself. Just because I just feel like, I'm getting this person's best and I got to figure it out. But this person has been doing that. So why not just pay them, and it'll take a lot of the hassle away, a lot of the time away, and generally it'll come out better. So absolutely. Absolutely.
As long again, and
did it freeze up on you, brother?
Oh, we're back on?
Yep, back on. Okay. I can hear you. Go ahead.
There we go.
Yeah.
Oh, okay, you got me.
Okay. Good.
So again, like I said before, I don't go to my plumber to get a haircut, right? But I don't just go to any barber. Right?
Exactly.
There's places I can go off a hard one. I can go get me a $2.99 haircut, $5.99 haircut.
Right.
That's how I'm going, right? So I'm a firm believer that you get what you pay for, but you also due diligence and understanding that, make sure that you've gone through and you've done your homework to make sure that what you're paying somebody to do, that they're actually doing, and that you're getting your money's worth.
Okay. Hey, man, it's great, brother. You've given a lot of knowledge, man. Looks like your company is definitely a company that I would want to, have running my portfolio, and but I trust you as an individual because I've known you for a long time, and you one solid brother. Hey, give the audience, man, your final thought, man. On financial planning and just in general, the benefits of it and that type of thing.
Well, I'll tell you this, the biggest deal you can do, the biggest benefit you can do for yourself is to make sure that you're at least putting money away. And for those that you say, man, I don't have anything to put away. I live paycheck to paycheck. Well, there's ways to go through and again, find a professional that can help you find some of those expenses that you have that you can cut back on.
Yep.
Right. And start looking forward to paying your future self.
Yep.
There's a lot of ways you can do it, man. And if it's $5 a paycheck, $10 a paycheck, put it away. It's a start, right? And with the power of compound interest, that stuff grows over time. Obviously, the more you can put away, the better. But pay your future self. And if you make money, and you make decent money, make sure you pay yourself first.
Yeah.
If there's a pair of shoes that you want to buy that pair of shoes, but make sure that you're always putting stuff away. You get a raise. Make sure you increase how much you're saving, how much you're investing, things of that sort. So we try to do that stuff for everybody, man. Try to get them to understand that. For anybody that doesn't know, man, you can see it on the logo, right? It's 8-1 Capital, all spelled out, EIGHTONE together, Capital. We're on Facebook, 8-1 Capital LLC. Same thing on Twitter, 8-1 Capital. You can follow me on Twitter also at Coach Chinea. I hadn't changed it, still a coach at heart, right? So I'm still at Coach Chinea on Twitter.
Yes, sir.
Yeah. So I'm on LinkedIn also, man. But it's been a blast, man. I appreciate you having me on, man. I couldn't be happy to be participating in this, man, and trying to go in and again educate people, right? Show people that there is a way, man. The fact that you're doing this, man, and this is good information, man. The stuff that you're putting out, and it's free of charge. Nobody's being charged anything. Absolutely. So listen to it, follow it, man. Take notes. Anybody has any questions that watches this, guys, feel free to email me. All right, info@8onecapital.com. Hit me on any of the social media. I'd be glad to answer questions, man. Be glad to talk with you guys.
Absolutely, man. And I want to say it's been a pleasure, brother. I knew once I saw you, that you had your company up and running. I said, I want to get him on, because I want to talk to him because I know he knows what he's talking about. Appreciate you, brother.
All right, man. I appreciate you having me on, brother. It's been good, man. It's been good to see you. Like I said, go Sharpstown.
Go
Sharpstown High
Sharpstown,
School.
baby.
Sharpstown Apollos, man. That green and yellow.
Yeah. Hey, go Pearland Oilers, baby.
Hey, look, man. Look. I pray for their success, man. I hope that they continue to, go on and be the perennial powerhouse that they are. I'll be pulling for them, but I'll be pulling for them from the stands now.
From the stands, absolutely, brother. Hey,
So,
thank you, man. And I'll hit you up later. We'll chop it up some more.
that'll work. Appreciate it, man. Thanks for having me on there.
Thank you, brother.
All right, guys.
Bye.